What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is RDBX, Redbox Entertainment. This finishes at $7.37 today. That is down 12.57%.
And it's gone.
So we've been covering this stock for over 2 months now, ever since this first squeezed. Yeah, this went from the $1 range to over 18. So honestly, this is more epic than the AMC squeeze. It's not quite at the GME level just yet, but yeah, this has been an epic short squeeze so far, and it may be done for now, but further down the road, it'll definitely have its time again. But this is still a hot stock on social media, so no company-specific news to justify this price action today. It just seems like the squeeze is over. People are slowly starting to take profits and shorts coming in here. But yeah, let's go ahead. Let's jump right in and analyze here. So first of all, this is a cup and handle in the making. Bottom of the cup being the low of 160, and there can be multiple possible tops. It can be $18, $19.25, $20.05, or even the high of $27.20. But those are all bullish indicators. That is telling us that the stock should come back up to one of those tops. To complete the cup, we do have a huge bull flag developing here. Here's the flagpole, and here's the flag that has been developing for the past few weeks. So that is a bullish indicator. That is telling us that the stock may break out to the upside. It appears like we have a descending wedge forming. Right now, this is consolidating between 9 and 7. So it looks like there's a bit more consolidation to go. This should consolidate somewhere around $8. And from there, it should break out to the upside again. So descending wedge, currently a bullish indicator. There is a gap down at 1370, so that is a bullish indicator. That is telling us that the stock should come back up to 1370 eventually to fill that gap. And in the aftermarket here, this is pulling back down to 710. So if this aftermarket action holds, that would be a bearish indicator for tomorrow. That is suggesting that tomorrow will sell off as well. And if you guys want to follow along, the link to the chart is in the description down below. So right now this is sitting on the support of 735, which it finished at today. So if this goes to the upside, next levels of resistance would be 765, 790, 820, 850, 880, 915, 945, 980, 1010, 1030, 1050, 1090, 1125, 1170, and then 1205. There is resistance above 1205, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 710, 685, 660, 640, 620, $6, 575, 560, 545, 520, and then 505. There is support below 505, but we're not going to discuss that right now. So right now at the current price, 737, as the stock continues to run to the upside, the channels get wider, so expect a significant increase in price action if this stock continues to run to the upside, and to the downside, the channels get more narrow. So expect a significant decrease in price action if the stock continues to run to the downside. RSI is currently at 45, so pretty average, a little bit below average. So according to the RSI, the current price of 737 should be a little bit higher, and this did 5 million in volume today. Very significant volume, above the average of 4 million, so this sell-off today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So the last time we analyzed this stock, I said it would pull back to 860 at least to fill the gap, probably even lower, and here we are. So I'm not sure how low this is going to go, but it appears like there is still a bit more downside to go. That being said, we are getting more bullish indicators than bearish indicators now. Again, we have bullish indicators in the cup and handle, bull flag, and gap down. We have a bearish indicator in the aftermarket action, and a neutral indicator in the RSI. So overall, the stock does appear to be slightly bullish to bullish at the moment. So therefore, if you want to go long, not financial advice. Honestly, the current price, 737, isn't a bad entry. It's not great, but it's not terrible. Very average entry here. So you can't go too wrong, but I do believe in the very short term, this will continue to pull back a bit more. So I can't support going long at the current price, and if it pulls back, then you can just average down at the supports that I mentioned before. But honestly, if you're a little patient here, you should be able to get a better entry than 737. So I think the best move would be just to hold off, observe the price action, see when this starts to bottom out, catch support, and then you want to come in and make your move to get this at the lowest possible price. Easier said than done. But yeah, right now it still looks like it's falling knife. So from the current price, 737, this should eventually come back up to 1370 to fill the gap, and that would be over an 85% upside. So there's already a huge amount of upside potential, at least 85%, and you should be able to get even more if you enter at a better price here. So I'd say going long at the current price would be a medium risk, high reward play. Definitely worth the shot. I would have no problems with you guys going long right here. But I think if you're able to hold off and get this at a better entry, maybe in the $6 or $5 range, this would then become a low risk, very high reward play. So either way, going long looks like a good play here, but you can potentially make a lot more money if you're a bit patient and you get a better entry. Now, if you want to go short, not financial advice, I would not do that, and I would not recommend it. It's not necessarily a bad play, but you missed a lot of downside already. You should have went short anywhere from the $15 to $10 range, and here at $7.37, there probably is more downside to go, but not much. And again, this should come back up to at least $13.70 eventually to fill the gap. So I would say going short here would be a high risk, medium reward play. Not worth it in my opinion. The stock is starting to look bullish again. There are definitely way better short plays out there in the market. You missed your chance on this one. If you want to go short, please do that at your own risk. But I think it'd be better just to move on and look for a better play. So pretty straightforward, guys. The squeeze is over for now at least. It's been pulling back pretty significantly. Falling knife right now. But eventually, Redbox will have its day again. Still a lot of retail momentum though. Ape's still strong here. So if you want to go long, the current price is not a bad entry. You can't go too wrong here. Already a lot of upside potential. But I think if you're a little patient here, you should be able to get a better entry in the $5 or $6 range. So I can't support going long at the current price and lower. And if it pulls back, then you can just average down at the supports that I mentioned before. And if you want to go short, it's not a bad play. It can work out. Just a bit risky. I personally wouldn't go for it. I think it's a bit too late to go short. But if you want to go short, please do that at your own risk. You're probably better off just moving on from this stock though, and looking for a better short play. So sorry to everyone who lost money in the stock today, and good luck to everyone currently in the stock and to everyone looking to take a position. This is RDBX, Redbox Entertainment. Thanks everyone for watching today. I appreciate you guys. Please, like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.